Alright guys, so in this video, I'm going to teach you my live trading model, and this is the model that I trade live with in my Discord every single day. I'm not going to hide everything. I'm just going to explain each and everything that is there to this trading strategy, and it is pretty simple. And before I start, I just want to let you know about myself. I've been trading for over 8 years now, and I have helped more than hundreds of students get funded, get their payouts, consistent payouts, and currently I am funded with over $1 million collectively, including Epics, TopStep, FTMO, and Funded Next. And in this video, I'm going to teach you the simple trading strategy that I trade live with. So let's get on to it. All right. So the very first thing is you have to identify your draw on liquidity on the 1 hour or 4 hour time frame. Okay. Now you don't have to always identify the correct draw on liquidity. It is just for your reference, and I'm going to explain later why it is not that necessary, but it gives you good confidence. Like, gives you confidence that, okay, I'm trading in the direction of my draw on liquidity. Okay. So let's say that you are on the 4 hour time frame and you are seeing some equal highs, right? And or it could be a previous day high or something, but for now we have, let's say we got relative equal highs on the 4 hour time frame. Now make sure that your time zone is set to New York, because that's the time frame that I use. All right, so once we have our draw on liquidity, right, and let's just do this over here. Now the next step is very simple, is after 9:30 a.m. New York time, so this is going to be 9:30 a.m. New York time, right? You are going to the 5-minute or 15-minute time frame. Okay, so ideally I stick to 15-minute, but sometimes I go to 5-minute as well. So what you are waiting for after 9:30 a.m., right, is a fair value gap formation or displacement towards your draw on liquidity. So if price goes up, right, on the 5-minute or 15-minute time frame, and it creates a fair value gap, a bullish fair value gap that is aligning with your draw on liquidity, then we are going to utilize that fair value gap to take our trade. And let me explain how you would do that. So let's suppose that we got this 15-minute fair value gap, right? Now what you want to do is, the next step is that you are waiting for price to tap into this fair value gap, okay? Now as soon as price taps into the 15-minute fair value gap, you want to drop down to 1-minute time frame, okay? And this is where our entry model comes in, and this is the most important part of the trading strategy. If you get this wrong, this strategy might not work for you, okay? So make sure there's no high impact news like 10 minutes away from your setup, right? Ideally, you want to trade after the high impact news. But essentially, when price taps into the 15-minute fair value gap, you're dropping down to the 1-minute time frame. And notice this manipulation leg, right? So from this high to this low, what you want to do is mark out the first presented fair value gap in this manipulation leg. So there could be 2 fair value gaps here. So let's say there's one over here on the 1 minute, there's one over here on the 1 minute, right? And let me just make this a bit small. So you want to wait for price to inverse the first presented fair value gap in this manipulation leg, which is over here, right? You are not going to only wait for the first gap here, okay, the last one, okay? You are waiting for all of the fair value gaps in the leg to get inversed. But let's say that there was only one fair value gap here in this manipulation leg, then you would simply wait for price to inverse that fair value gap. Now, once you have these rules being met, you can take an entry, a long position. As soon as the candle closes above this fair value gap, you can take a long. You can put your stop. Oh my God, dude, where is this? You can put your stop here, and you can go for 1 to 2 risk reward. We are not going to target the 4 hour draw on liquidity. It is just for our reference. And once we get displacement on the 15-minute, we can form a 15-minute gap or 5-minute gap. Price taps into it. We get 1-minute inversion, right? We can take a long position. Now, here are some very key rules that you have to keep in mind. Otherwise, you might fail in trading this strategy. So notice this high over here. This is the closest liquidity after our entry, right? So as soon as the closest high that gets swept, you want to go break even, okay? So as soon as this level is hit, you are going to move your stops to break even, and then you're going to let the trade ride towards the upside. Now here are a couple of more things, and this is the most important rule I would say. So you want to use the highest time frame inversion, and what I mean by this is, in this manipulation leg, right? First thing first, you want to go onto the 1-minute time frame. Okay, you have to watch this part again and again to understand it, okay? I'm going to try my best to explain this, but keep on watching. So first off, you want to start off on the 1-minute time frame. If there is a fair value gap on the 1 minute, that is good. Now you want to go on to the 2 minute time frame, okay? And you want to also check if there is a 2 minute fair value gap within this manipulation leg. If there is no fair value gap on the 2 minute, then you are going to stick to 1 minute inversion. But let's say that there is a 2 minute fair value gap here as well. Now, the logic behind this, you want to take the highest time frame inversion, and the highest time frame is 5 minutes. So you can go first check the 1 minute, then 2, then 3, then 4, then 5. So let's say there was a 2 minute gap, let's say over here, right? You would wait for the inversion of that 2 minute fair value gap. But let's say that there is also a fair value gap on the 3 minute, right? So you're going to use that gap as your inversion point. So you will wait for the 3 minute candle to close above that gap. But let's say there is no fair value gap. There's no fair value gap on the 4 minute. So then you would stick to 3 minute because that is the highest out of all these 5. So we got 1, 2, 3, 4, 5. This is the time frames that you're gonna be using, right? So you check the 1 minute. If there's a gap on 1 minute, you check the 2 minute. Now, if there's no fair value gap on the 2 minute, you stick to 1 minute. But if there is a gap on 2 minute, you check 3 minute. If there's no gap on 3 minute, you stick to 2 minute time frame. If there is a gap on 3 minute, then you check the 4 minute time frame. And if there's no gap on the 4 minute, then you stick to 3 minute. And if there is a gap on the 4 minute, you simply check the 5 minute. And if there's no gap on the 5 minute in this manipulation leg, then you stick to 4. And again, the highest is 5. So if there's a 5 minute gap in this manipulation leg, then you're going to use that. So you will wait for the 5 minute candle to close above this inversion on the 5 minute, and then you take your entry. When I'm going to show you the examples, you will understand what I'm talking about. So simply put, you would take your entry after the inversion. You will go break even at the closest liquidity level, which is this high after the entry. And you're going to go for 1 to 1.5 or 1 to 2 Bristol watt, and simply it would be inversed if we are taking a short position. So if we have like sell side liquidity on the 4-hour or 1-hour time frame, after 9:30, you want to wait for price to displace towards your draw on liquidity, form a 5 or 15-minute fair value gap, right? You want to only utilize the fair value gaps that form after 9:30, not the old ones. So after 9:30, we form a fair value gap on the 5 or 15 minute. We wait for price to tap into this level. We start looking for inversion. So if there's a gap on 1 minute, you would take it. And if there's a gap on 3 minute and not on 4, you would take the 3-minute inversion. And simply put, you would target 1 to 2, 1 to 1.5, and go break even at this low over here. Now that we have understood the strategy, let me give you guys some examples. All right, guys, so here is example number 1, and I took it yesterday live with the Discord members. So before 9:30, what I noticed is that we had on the 4-hour time frame, we had these very clear like equal highs, right? And we were overall bullish. So you can see we were respecting bullish PDRAs. We respected this gap, we respected this gap, we respected this gap, and we were bullish, right? So my bias was bullish, right? So what I was waiting for next is a displacement on the 5 or 15-minute time frame towards my draw on liquidity. And after 9:30, you can see is that we created this fair value gap over here, right? We have this gap, and also we can kind of like utilize this gap as well. But ideally, this is the main focus over here. Now, what I did is I dropped down to 1-minute time frame, and I waited for price to tap into this gap. So going here, you can see price did go below, tapped the extreme fair value gap, but it didn't close below the first gap that formed after 9:30. Now, it doesn't have to be the first gap that forms after 9:30. You can keep on utilizing the 5 or 15-minute gaps until your higher time frame draw on liquidity is hit, right? So we tapped into this gap, and then we have this manipulation leg. So notice we have a fair value gap on the 1 minute here. Let's just remove this to make the chart a bit clean. We have 2 fair value gaps in this manipulation leg, right? But we also want to check the 2-minute time frame to see if there's a fair value gap in that manipulation leg, right? And you can clearly see that we have a 2-minute fair value gap here as well. Now, we want to also check the 3-minute to see if there's a gap on the 3-minute time frame as well. And you can see that we have a 3-minute gap here as well, right? So we have a 3-minute gap as well. Now, we want to check the 4-minute time frame. And if I go on to the 4-minute time frame, you can clearly see that in a moment, yeah. So over here, we have a 4-minute gap as well. Now, the final time frame is 5 minute, right? So on the 5 minute, there was no fair value gap. So we would stick to the 4 minute time frame to take our inversion. Now I simply want a closure above this inversion, right? And now we have inversed this 4 minute gap. We are coming from a 5 minute fair value gap, and we have a clear draw on liquidity on the 4 hour time frame. Now everything is aligning perfectly. So what we can do is take a long position here. We can put our stops below these bodies over here, not the wick, but the bodies, right? And you can go for 1 to 1.5. And if I play this through, you're going to see that the take profit level was hit with ease. Very simple, very mechanical. And yeah, you just got to identify your draw. Even if you get the draw on liquidity wrong, if you have a fair value gap, price displacing in one direction after 9:30, you can utilize that fair value gap. And you would go break even at this level over here. So this is the closest liquidity here, right? And as soon as this level is hit, you're going to move your stops to break even, and then you're going to let the trade ride. Let's move on to the next example. All right, guys, so here is example number 2. So first thing first, we want to start off on the 1 hour or 4 hour time frame to identify our draw on liquidity. And clearly you can see that we got these relative equal lows over here. We have swept buy side liquidity, so I was expecting that we're going to push lower towards these equal lows. Now let's go to the 5 or 15-minute time frame. So I'll go to the 15-minute time frame, and this is the 9:30, right? So we formed like a 15-minute fair value gap, right? So we can utilize that. We had a displacement to the downside that formed a 15-minute gap. Now price went into that gap and then it pushed down. So let's see what happened here, because we want to take our entry around this area. So let's drop down to 1 minute time frame. And you can see that we have this gap on the 1 minute. This is the dealing range low, and this is the dealing range high. So in this dealing range, or a manipulation leg, we have one fair value gap on the 1 minute, but we want to keep checking the higher time frame. So we go to the 2 minute, we have a gap on the 2 minute as well, right? Now we want to check the 3 minute, and there is again a gap on the 3 minute time frame as well. Now we want to check the 4 minute. And all right, so here's the important part. We have a fair value gap on the 4 minute time frame, but notice the dealing range is not there anymore. So there was a low here, but it is not there on the 4 minute. So now we just gotta stick to the 3 minute time frame, because the dealing range is not there anymore. The manipulation leg is not there anymore on the 4 minute. So over here, you can see that we have a fair value gap, right? And price closes below this inversion. You could have taken your entry on the retest, because when you get inversions on the higher time frame, you are most likely to get inversion. But you could have taken your entry at the close of this, right? You could have put your stop below the bodies over here, and you could have gone for 1 to 1.5, or you could have targeted this low down there. Now, we had this break-even zone over here, right? So we have this closest liquidity near our entry. So that is your entry, or if you took it here, that's well and good. But even if you went break even, if you look closely, price never tagged your break even zone, okay? And right after that, price just displaced towards the downside, because we had clear draw on liquidity. Price displaced in one direction after 9:30, and we utilized the 15-minute gap. So now let's move on to the next example. All right, guys, so here's the last example. So first thing first, we want to check the 1 hour or 4 hour time frame to identify our draw on liquidity to the upside or to the downside. Now you can see that price has been pushing up. The order flow is bullish, so we can expect that this could be our draw on liquidity. We got these equal highs somewhere around here on the lower time frame. You could say like 1 hour time frame. So let's check the 1 hour time frame and see what's going on. So you can see, yeah, we got some equal highs. We got the Asia high from Thursday. So overall, we are bullish. So there's no point in taking a short position. So let's drop down to 5-minute time frame. Now after 9:30, right, we can see that we formed a 5-minute fair value gap. So now we can look to utilize this fair value gap to the upside. Okay, and let's then drop down to 1 minute time frame and look for our inversion setup. So we tapped into it, but there's no fair value gap as of now. So price can come back down. You can see it swept liquidity, but it also formed a fair value gap, right? So this manipulation leg has a fair value gap. Now you also want to keep in note is when price is coming into the 5-minute or 15-minute fair value gap, it must sweep some form of liquidity on the 1 minute time frame. Okay, so we had this low, price swept that low, price is also inside the 5-minute gap, and we got this fair value gap on the 1 minute. So now the next step is looking for a higher time frame fair value gaps. So if you go to the 2-minute time frame, well, there's no fair value gap on the 2-minute time frame in this case, so we are only going to stick to the 1-minute time frame inversion. So now we have this gap over here, and we want to simply wait for price to close above that gap, and that would be our inversion. So right here, you can see that we slightly closed above the gap. Now, you could sometimes utilize the volume imbalance as well, but I don't do that. I just wait for the inversion. So we're coming off on the 5-minute gap. We have inversed this 1-minute gap, right? And then you can take your entry. You can put your stop below the bodies here, and you can simply go for 1 to 1.5 or 1 to 2. So let's see how this plays out. Bam, right there. You could have gone for 1 to 2 here as well. Now, this would be your break-even zone. So as soon as price hits the closest liquidity that is near to your entry, you're going to move your stops to break-even, and then you're going to let the trade ride. So that's going to be it. Thanks for watching.